Hey, welcome everybody. This is Mark Dannenberg, and this is the Options Moneymaker Q&A session for Wednesday, November 18th, 2020. And I have also with me this evening Aaron Rumley and Michael Kastner. So we'll be hearing more from them as we move forward a little bit here. So if you're brand new to our Q&A here, we are committed to helping you learn how to trade. So you've come forward and decided that you want to learn how to trade futures, want to trade options, and you realize that you need to spend some time actually learning how to do that. So our mantra really is to learn to trade and then trade to earn. You need to invest some time, first of all, in learning how to trade so that you can properly trade to earn, and you could possibly earn a sizable income for yourself. We'll talk more about that here in just a little bit. So we set aside some time every other week to respond to questions that you might have. If you're early on in your learning cycle, you might have more questions. If you are well immersed into your trading and you still have some questions or things you want to understand more about, then this is the place to do that. And sometimes people just show up because they don't have a question themselves, but they might hear a question that helps them clarify a different level of understanding. Questions that we address here are all about the new cycle trading adaptive entry system that we use for identifying trends. We could talk about the profit sweet spot matrix and the cycle finder plus crosses that we put out to the live trading room every morning. Aaron does that. Live trading room itself, if you have any questions about how we operate in the live trading room, we provide a lot of real-time trading and support throughout the day, mostly focused on futures, NASDAQ futures on a 5-minute chart. But we emphasize that the adaptive entry system, which we're teaching in real time throughout the day, can be used for a variety of timeframes, a variety of different futures contracts, or a variety of options trades. So it's very, very versatile, very adaptive to whatever you might want to use it for. Profit Builder Plus education, if you're early on into your options trading education, Profit Builder Plus is a great curriculum for anybody who really wants to immerse themselves in learning how to properly trade options. And futures trading is something we also offer, education course. It's really focused on how to properly manage risk that will give you the reward of futures. And we also, during the futures trading education curriculum, talk about the adaptive entry system, which is key to being successful. Now, New Cycle Trading and Analytics has a forum that we have a few traders stop by and make comments or pose questions. So please feel free to visit us at newcycletrading.com. Here in this Q&A, we represent both Options Moneymaker and New Cycle Trading, since we've worked so closely with New Cycle Trading over the last couple of years to build the tools that we have. And I think it's a fantastic set of tools. Now, one of the things that we really emphasize is thinking about your trading as a business, not as a gambling addiction, not something that replaces your Atlantic City or Las Vegas trips. It really is a small business. It's a way for you to earn an income. It's a way for you to add income to your current, maybe full-time income. It's a way to potentially replace the income that you have and be a full-time trader. But it's very important that you use a personal trading plan, which we've designed and made available to our community so that you can see on a daily basis what your projected income is potentially over a 12-month period. Now, we usually do a review of the day's performance at the end of each day, and I've not done that for the last 3 days, so I'm going to actually consolidate Monday, Tuesday, and today into our review. So what I'm going to do is I'm going to pull up the adaptive entry system performance. So Monday the 16th, here was the detail. I know many of you like to take a quick snapshot of the detail. Tuesday the 17th, starting at 7 a.m. The first trade was at 7:27. That's the first trade after 7 a.m. Eastern. And the last trade was at 3:15 Eastern. And then today, where the first trade that we would measure would be 7 a.m. here, and then the last trade today was at 3:15 p.m. So we take a look at the daily summary, and there are what we decided a few weeks ago when we started profiling the personal trading plan and how you properly use it by coding your performance at the end of each day. We decided to focus on two different categories. Now, most people aren't going to have two different categories. You can have one personal trading plan, but we wanted to show you a little bit about how differently things could be for different types of traders. Some traders might want to only trade a couple of the adaptive entry system signals. Some traders might want to trade all of the signals. There are 4 signals primarily. Some traders might want to trade a limited amount of time, which we measure from 9:30 to noon. Some traders might trade from 7 a.m. Eastern to 4 p.m. Eastern, a longer extent of time. And of course, we're not limited, you are not limited to just these 2 categories, but there are 2 that we chose, one a longer time frame, one a shorter time frame, one all signals, one only the trend bias and trend continuation signals, so that you could get an idea of how effectively the personal trading plan works, regardless of what method you're using. So in our 9:30 to noon all signals category, on Monday, we put up 30 points. Tuesday, we put up 20 points, and then today, 29.75 points. Now, with the NASDAQ 100 futures, which is this is what this is measuring, it's $20 a point. So $20 per point per contract. So I'll show you how that translates into our actual performance here in just a minute. In the 7 to 4 category, trading the trend bias and trend continuation signals only, not taking the consensus signals or the momentum signals. Actually on Monday, we lost 6 points. You know, we expect that we're going to have both winning and losing days. And it's nice to see that if we're going to have a losing day, it was a pretty manageable losing day. Yesterday was also a losing day at 12.75 points, and today was a winning day at 19.5 points. And then you can see the contract counts. We traded 15 contracts on Monday, and then yesterday and today, sorry, trades. 15 trades on Monday, 16 trades today and yesterday, and then 8 trades, 9 trades, and 13 trades. So now what I do with that information is I pull up our personal trading plan. Now this is a tool that we created here at Options Moneymaker for the purpose of you being able to look at your performance at any given point in time throughout the course of 12 months and have a reasonable projection of what your income could be if you continue to trade at the level that you've been trading. So I'm going to start with our 9:30 to noon category. And in the first category, we did, let me just back up here for a second. Okay, so I want to jot these down. We've got 30, 20, and 29.75. 30, 20, and 29.75. And in the other category, we did 6, 12.75, and 19.50. Normally, you're plugging these in at the end of every day, so it makes it really, really simple. All right, so we did 30 points on Monday. Now it's $20 a point, so that's $600, and we are scaled up to 3 contracts. So we're trading 3 contracts based on the personal trading plan, giving us a scale up to 3, and I'll talk more about that in just a minute. So $1,800 was our profit on Monday in the 9:30 to noon category, and we had 8 trades, so 3 contracts per trade is 24 contracts. Yesterday, we did $1,200 because we had 20 points of profit, which 20 times $20 a point is $400, and then we're trading 3 contracts, so that's $1,200. And we did 9 trades at 3 contracts per trade, so it's 27 contracts. And then today, 29.75 points, $20 a point, 3 contracts, $1,785 today, and we did 13 trades. 3 contracts per trade is 39 contracts. Okay, I'm going to lock in the contract count for our actuals here, And I'm going to jump over to our other category and I'm going to plug in our performance, and then I'll talk about projections and how to evaluate that. So we lost 6 points at $20 a point and 3 contracts, so minus $360. And we did 15 trades, 3 contracts per trade, so that's 45 contracts. And let's see here, we did minus 12 3/4 points yesterday. $20 a point, 3 contracts is minus $765, and 48 contracts for that, 16 trades, 3 contracts each. And then today we were favorable, 19.5 points, $20 a point times 3 contracts, $1,170, and 48 contracts based on 16 trades. Okay, so now we have all of our data entry complete, and I'm just going to quickly save that, make sure we don't lose that. So now I'm going to do this. I'm going to do an evaluation on both categories. So our 7 to 4 trend bias and trend continuation signals, I'm going to look at these two numbers right here. We have 19.6 weeks behind us. Okay, we've completed 19.6 weeks of a 52-week income forecast. Now, most traders that I've encountered over a lot of years of trading never think about their actual future income. They're always thinking about today. What did I do today? I feel good about today, feel bad about today. It's the emotional roller coaster that they can't ever get off. And they never are able to put their trading for today in context of the bigger picture. So if I continued to operate at this level, what would I make over the course of 12 months? Most traders that I've encountered do not think that way. And we're trying to guide our community of traders to thinking about their trading as a small business, where you want to do a financial forecast for yourself to see how your trading would forecast out into the future. All right, so 19.6 weeks out of 52 weeks are complete. We've had 27 losing days in 19.6 weeks. Now that's an important number because we want to know what our average winning day is and what our average losing day is. And these are not just pure averages by taking all of the winning days, totaling it up and dividing it by the number of winning days. This is also taking into account the frequency of winning days relative to the number of weeks that have expired. So this is a true representation of your run rate average, which takes into account maybe you had more losing days than you would have liked, maybe you stumbled a little bit, maybe you had fewer losing days, whatever it is. This is a number that is looking at your average winning day, also taking into account the ratio of losing days and winning days to the number of weeks behind us. This is your average losing day doing the same thing. It's taking into account the fact that we've had 27 losing days in 19.6 weeks. And now we're going to use those numbers to project out into the future for the balance of the 52 weeks that we have, and say, if I continued to run at this run rate, we refer to these numbers as your performance run rate, what would my income be? So right here is where we want to make sure that we're plugging in the forecast for the balance of our 52 weeks. So our actual performance run rate is 32.87 for our winning days. Now you can see when we plugged this in as of last Friday, it was a little bit higher than that. The numbers aren't going to be significantly different, but there's a little variation to the numbers on a day-to-day or week-to-week basis. And it's important that you forecast appropriately based on what you have actually been able to accomplish. So I'm going to put 32.87 in that forecast category for our winning days, and I'm going to put in minus 34.25 for our forecast of losing days. So now we've built in a ratio of winning days to losing days, and we know what the average is so that we are able to forecast forward based on what we've actually done. We're capping ourselves out at 3 contracts right now. We can change that. You can change that as an individual trader, individual business owner. And what we see is that our income forecast for a 12-month period now is projected to be $296,593. Now that's a projection. It's not going to be exactly that number because these run rates are going to vary. They might improve, they might erode. Whatever they are, they're going to be your actual performance. And you're going to want to project forward based on that actual performance. So $296,593 is the current projected income. Now, let me remind you that we started with $5,000. By starting with $5,000 and then trading a number of contracts where the margin requirement on those contracts would not exceed 10% of the balance of the account, the personal trading plan has scaled us up from 1 contract to 2 contracts and now to 3 contracts. So first of all, the number of contracts will never exceed a margin requirement of more than 10% of the balance of the account. But we can also have another limiter, which is entirely up to you. It's at each trading business owner's discretion. We capped ours out at 3 because we're demonstrating for you here how the personal trading plan works, how effectively it works, even though you're not trading a large number of contracts. So we've capped ours out at 3. If I wanted to change that, I can change it to whatever I want. I could put 20 in there. I'm not sure 20 is practical, but then you'll see immediately that we will jump up to 20 contracts. Let me just lock in the actuals here. In the contract override field, we put in the number of contracts that we actually traded so that if we do modify this maximum number of contracts, it won't affect anything that's already in the rear view mirror. And you can see here we immediately jump to 20 contracts because we say we're willing to trade 20. And we would do that because 20 contracts, $500 per contract, is $10,000 a margin requirement. 10% would be 10% of 100,000, and so we would need to have more than 100,000 in the account, and we see that. So we would have that, so we could jump up there. I'm not sure that that makes sense, but that is entirely up to you. But you can see that you go from about 296,000 to 1,000,003 just by upping to 20 contracts. So there's a whole different dynamic with trading 20 contracts than there is with trading 3 contracts. So proceed cautiously, proceed with wisdom based on your own knowledge and understanding of your trading. But regardless of what you see here, $5,000 to 296,000 is a pretty decent number over a 12-month period. And that number may continue to come down if we see that the performance erodes a little bit off of our current run rate. But we're just going to monitor it, and we're going to see what it is. Whatever the outcome is, that will be based on our actual live performance. All right, so now let's jump over to our 9:30 to noon category, and we're going to take a look at the same thing. We've had 30 losing days in 19.6 weeks, okay? Our average winning day is 24.66. Our average losing day is 33.94. Now our numbers have improved slightly because we actually have not had a losing day now for 3, 6, 7, 8 days. We've had 8 straight days of winning days. And so that will alter our number. So we're going to plug our actual run rates in so that we forecast forward based on how we've actually performed. 24.66 is our winning day average, and 33.94 is our losing day average. All right, so we see, having capped at 3 contracts, we see that our income potential in a 12-month period, committing ourselves to trading from 9:30 to noon, taking all 4 of the adaptive entry system signals in that time frame, has the potential to grow the account from $5,000 to $195,000 over a 12-month period. Again, I think that's a very, very solid number. But as I said, if you are confident in your understanding of how you earn this run rate, and you decide you want to increase your participation, you could always increase by 1 contract, or you could increase by 2 contracts. You choose to do whatever you want with your trading business. This is a variable that is completely at your discretion and your control. You should use it wisely based on a full confident understanding of how you achieved the run rate that you have. If you're looking at your trades and you go, wow, I got really lucky on that one, or you're looking at your trades and you don't understand what happened, you should not be increasing contracts. In fact, you may want to decrease contracts. You could decrease maximum contracts to 2. It won't decrease anything that we've already entered, but going forward, you could decrease your contracts to 2, and you still end up with a forecast of about $152,000. So I think 3 is a very reasonable number of contracts. It doesn't interfere with the flow of the market. You're not all of a sudden, coming in and trying to lay on 100 contracts. That would be, super aggressive. I don't think any of you want to do that. But the whole purpose of this plan was to build something that would help you at any point in time look at what your income forecast is. Aaron says it frequently. Michael says it frequently. I say it all the time in the live trading room. Depending on where you are today, could be 11 o'clock in the morning, could be 10 o'clock in the morning, it could be 1 o'clock in the afternoon. Depending on where you are today, you have to think about whether you want to take the next trade. We record and log all of the trades from 7 a.m. to 3, and usually sometime between 3 and 3:30, we're done. And we're doing that because we are building a database to provide as much data to you as possible and what to expect during different time frames. But if your goal for the day was to make 25 points, because you know that will keep you on pace to earn $195,000, and it's 10:30 in the morning and you're up 25 points, you have to make a decision. Do I want to keep trading? And we have a lot of people who tell us that they're leaving for the day early in the day because they've made their goal and they don't want to interfere with that. They don't want to give it all back and start all over that day. So that's the approach, and that's the logic behind that. And I'll just show you one last thing here on the averages. Those categories, the 9:30 to noon, all signals, averages for 112 trading days is averaging $373.30 of profit per day per contract. That's a single contract, $373 per day per contract. The 7 to 4 category, taking just the trend bias and trend continuation signals for that same 112 trading day time frame, is averaging about $554 a day per contract. The best performing category we have is trading from 7 to 4, which not everybody wants to do. That's a long time to trade, taking all the signals. That category we know confidently is averaging about $1,135 a day per contract. And then at any point in time during the live trading room, or even this evening if you want us to, we can use our research category that Aaron very intelligently built into this, and we can tell you, what combination of signals would produce X amount of profit during a specific time frame. We have a lot of people that will come into the trading room or send us a note and say, listen, I've got a job or I've got other obligations. I could only trade from 7 a.m. to 9 a.m. What do you think I could produce during that time? We can tell you based on our history. We can't guarantee going forward that that's going to produce the same result, but we can tell you based on 112 days of history, trading day history, what you could reasonably expect, and we can tell you how many negative days or losing days you could reasonably expect in those categories, how many trades that you could anticipate taking each day, and what our average win-loss ratio has been during that period of time. Okay, one other thing that I committed to is to just do a quick review of fractals. We get questions in our live trading room about fractals, especially from people who are relatively new and they just want a good understanding of it. So here it is. What I'm showing you is a NASDAQ 100 5-minute chart. And when you see this red V, that is a fractal. When you see this green inverted V right here, that is also a fractal. This is what we refer to as an upper fractal. This is what we refer to as a lower fractal. What defines a fractal is on a lower fractal, the two price bars preceding the fractal have higher lows. So you can see that neither of those bars' lows came below the low of the fractal. And the two bars that follow the fractal bar are also showing higher lows. So you can see that this is the lowest low in a 5-bar sequence where it is the center bar of a 5-bar sequence. Same thing with an upper fractal. Upper fractal is the highest high in a 5-bar sequence where the center bar is the highest bar of those 5 bars. So here's another lower fractal. The 2 bars before it were higher lows, 2 bars after it were higher lows. Here's another upper fractal. The 2 bars before it were lower highs, and the 2 bars after it were lower highs. Now, why do we talk about fractals? Because the fractal is a mathematical calculation within the market that has a lot of historical precedence to it that suggests if the price were to move below a lower fractal, there is an increasing probability that that price is going to continue to move lower. When the price moves above an upper fractal, there is an increasing probability that the price will continue to move higher. So here's just one example. Now, they don't 100% of the time work that way, but then again, there's no individual signal that will work 100% of the time. But the fractals have about an 80, low 80% win-loss ratio. So here's an upper fractal. Okay, we didn't know it was an upper fractal until the 3rd bar after the fractal bar. 2 bars after it have to close, and once that 3rd bar after the fractal bar opens, we are now defining a fractal. If and when the price were to move above that price level, the high of that bar, so I'm looking at the open, high, low, close price up here in the upper left-hand corner of the chart. If I highlight my cursor on that price bar, you can see that the high of that bar is 11,974.75. Make sure you're looking right here at the high, H for high. So if I put my cursor there, it's 11,974.75. Now the price was moving lower, moving lower, moving lower, and then all of a sudden, boom, right here on the 1445 bar, we broke above that fractal. We broke above 974.75. Actually, it's this one, 979 is when we broke above it. And then we continued to move higher. So there's an opportunity for 5 to 10 points of profit off of that fractal. Here was a lower fractal right here. We continue to move higher. We're not concerned at all about a lower fractal where the price is moving higher, but we could possibly take advantage of that if and when the price moves lower and breaks below the low of that fractal bar. And in this case, it was 970.50, $11,970.50. We broke below that level on the 1535 bar, and you can see that we kept moving lower, giving us plenty of opportunity to take 5 or 10 point profit or whatever you choose as your profit. Now, there are other fractals out there that just end up meaning nothing to us. You know, here was a lower fractal. We never ended up breaking it, and the next fractal was formed right here, so that that negates the prior fractal. We're always focused on the most recent fractal. So let's come to current right now. The market is trading right now. This upper fractal right here is at 11,896.75. That's the upper fractal. If we break above that price, the price of the market could continue to move higher. This lower fractal, I see that we actually broke through it, 11,873, and here we broke it at 11,873 and continued moving lower down to 11,855.75. So that's the gist of the fractals, and they are handled exactly the same way as any other trade that we place using the Infinity Dome, where we're locking in 5 points and then hoping that it's going to run to 10 points. That's the way we're managing the fractals. Erin, anything else you wanted to add regarding fractals?
Uh, just keep in mind that you have to have 3 bars afterwards for it to be official. 2 bars have to close. So you can have a fractal forming. You'll see the indicator on the chart 2 bars afterwards, but you have to wait for that second bar to close. So once you have 3 bars passed, once you can count 3 bars past the fractal, you know that it's an official fractal. AES signals trump fractals, meaning that if you're short in a fractal and a long trend bias comes on, you would reverse into the long trend bias trade.
Excellent point. Yes. And I'm not going to get into it here. We can discuss it more in the live trading room if you have questions about it. But I want you to be very cautious about being in a trade. So let's say you were short in an adaptive entry system signal and we broke through a fractal. You want to be careful that you understand how to manage twice the number of contracts, because one contract, or however many you're trading, would be opened based on the adaptive entry system signal, and the second contract would be opened as we break through the fractal. Though they're going to have 2 different price point entries on your infinity dome, it's going to show an average of those 2 price points, and you have to know ahead of time, not be trying to learn or figure it out when you're in that situation. You need to know ahead of time how you're going to manage that, whether you're managing it off of the average price or you're managing each entry price separately. So I don't want you to be kind of a deer in the headlights and be staring at your dome and wondering, now what do I do? I want you to understand that in advance. And I think you ought to go through some of those situations on a sim dome before you ever trade it live.
100%. Because you'll notice there's things that you have to pay very close attention to, such as fractals that form very close to each other right before the market open. So things happen very quickly on that 930 bar. So you could break an upper fractal. Didn't happen today because today's 930 bar was
kind of tame, wasn't it?
I think we did actually end up breaking both an upper and a lower fractal on the 930 bar. If it wasn't today, it was yesterday. But what can happen is it can go tag you in at the upper fractal and then reverse on you. And then you have the lower fractal out there, but it's less than 20 points away from where the upper fractal is. It'll stop you out, and then you're not quite sure what's going on in the dome anymore because now you're out, but you're not back in onto a short fractal. So it's very important that if you're trading fractals, that you do it in a sim environment for quite some time to be comfortable with them, especially if you're going to be trading fractals right at that 930 bar. And if you're going to trade fractals in conjunction with AES signals, because as Mark mentioned, you'll be in multiple contracts at different fill prices. So if you're new to futures trading, stick with AES. Rules are very simple. Signals are very simple to follow. Once you feel that you have a handle on them, then personally, this is what I would do. Switch to live, trade AES live. And when you've hit your goal for the day and you switch back to sim to continue to learn, that's when you start adding fractals and start playing around with fractals as back in sim until you get comfortable, and then you can bring fractals to a live dome.
It's really great
It's
advice.
doable. It's 100% doable. I do it all day long. But you have to be aware of where your stops are, where the fractals are, and what the price is doing.
Okay. Just on the heels of this discussion, Michael is asking, let's say we break through the lower fractal and now we have a long momentum signal. Do we take the long momentum?
Yes.
I have two, and Aaron and I may have different opinions on this. I think momentum signals should be viewed like they are with AES signals, which means I don't take a counter trend momentum signal if I am in a trend aligned trade. So for example, here, if I was in a short trade, whether trend bias or consensus or whatever, and this long momentum came on, I would not close my short trade to take the long momentum. That's my bias. That's what we've taught, and you just don't abandon the trend for a counter trend signal. And I have always treated fractals the same way. If I was short on a fractal and everything was lined up short, I'm looking at the lower indicators, and I can tell that it's still lined up short. I've got red bars. I'm going to be hesitant to take that, to cancel out of that fractal trade and take the long momentum, with one exception. And the one exception would be if I have a really nice profit in that fractal trade and I want to lock that in, and then I'll treat it as though I wasn't holding. I had already closed for a profit, and I'll take the momentum signal.
So the way that I call them out in the room and the way that I have always traded these fractals is that AES trumps fractals, even if it's a counter trend trade. And what I have found with the fractal breaks is that if we break a fractal and then let's say a lower fractal and you have a long momentum come on, most of the time you're already in a drawdown position on that fractal break because the signal is starting to reverse. And so even though momentums are counter trend generally, they're not that way all the time, but generally they are. I switched to the momentum trade because there's obviously momentum going in the opposite direction.
Okay.
Michael's asking, with your 39 contracts, does that include commissions when you were going through the live trading, the trading plan?
So by putting in the contracts, Michael, I'm putting in, first of all, what the dollar value is of the number of points that we accumulated. And by putting in the contracts, that then takes into account the commissions, the fees. So if you look at 1785, that was our profit, that was our gross profit, but 1629 was the profit after taking into account fees and commissions. And that's why we put in the number of contracts that we traded that day.
Those are net numbers on your personal trading plan. All the averages at the top are net numbers after commissions and fees. So what's being calculated to have for what we're plugging in for our profit day and loss days, those are all net point averages. So after commissions and fees.
All right, next question.
Mark, could you show what 7 to 9 trading day would look like? 7 a.m. to 9 a.m.
7 a.m. to 9 a.m., all signals. So if you traded from 7 a.m. Eastern to 9 a.m. Eastern, and you took all the signals, all 4 of the adaptive entry system signals, and your target is to lock in 5 points when you're able to, or be out at 10 points if it doesn't take you out at 5. Your average daily profit per contract based on 112 trading days is $323.88. There have been 25 losing days in the 112 days. You're going to average about 6 trades, just over 6 trades is your average, and it's got about a 71.6% win-loss ratio.
Mark, how about 9 to 3, all signals?
9 to 3, all signals. Okay, 9 to 3 Eastern Time, all signals. Average is $708.17 per day. It's based on a 112 day trading day database. 26 losing days. You're going to have probably around 21 trades during that period of time, 6 hours period of time, you got about a 74.2% win rate. That's a really strong number right there, 9 to 3.
Bruce is saying at the moment your chart seems to be showing a trend bias short. My red bar is on, but not showing a T. So you just need to go to your AES settings and check the box next to display trend entries.
Check that, Bruce, and see if that's unchecked. If you check that, that will take care of the problem. And you access that by looking for your NCTA adaptive entry system in the upper left-hand corner of your chart. If you don't see that and you see this little downward facing arrow, click that, click the settings next to adaptive entry system, and then it pulls up your inputs. So you need to have display trend entries.
I can also send you the link that New Cycle Trading, they just started sending out this web page that gives you pictures for the settings too, of how to access those settings. And what each setting means.
I was asking, will the trading room be open at 7?
We have no plans right now to open the live trading room at 7. We open at 8:45, which is 45 minutes before the regular market session opens. But, you know, people who want to trade prior to the live trading room have their own charts, their own adaptive entry system charts. If you're going to look over our shoulder and follow along with us, 8:45 to 3:30-ish is when we're available to trade, and you can follow along with us.
Mark, how about fractals only from 7 to 9:20, I guess? Yep.
Let's see.
And then from 9:20 to 9:40 is looking to skip market open.
Where is that? Just right here, and just
Yes.
F. So what are the times, guys?
7 to 9:20.
7 to 9:20. Somebody doesn't like market open. Fractals only, about $138.86. 7 to 9:20 fractals only.
And then he's looking for 9:20 to 9:40 too.
9:20 to what?
9:40.
$23.47.
Keep in mind there's only been 62 days of that because you won't necessarily have fractals every single day during that time frame.
Kenneth is asking, when you say all signals, are you including fractals? No. When we say all signals, it is the trend bias, trend continuation, consensus, and momentum signals that are part of the adaptive entry system. And then Aaron is really good about identifying fractals throughout the day also on top of that. So we can look at this data all plus fractals or just all. And if I had 7 to, let's say, 1, 13. So 7 to 1, all signals plus fractals is about $1,064.
So Michael is saying, does the 373 include commissions? So what you're seeing on the AES performance tracking is not inclusive of commissions. The personal trading plan, where we're plugging in our performance, we're plugging in the amount of trades that we take each day, those average numbers at the top. If you want to switch to that, Mark.
What am I looking at? I'm sorry, Aaron.
Personal trading plan.
Yes, okay.
So the personal trading plan, that's inclusive of commissions. So you can see that it's averaging a little over 13 points a day after commissions. And on NQ, each point is $20. So it's about $261.60 a day. That's the net amount. Which, yeah, and there's similar tracking links, right? The personal trading plan and the AES tracking.
Mhm. Michael, what are you asking? That's the all-day trading? Oh, on the personal trading plan, this 24.66 and the 33.94 is the 9:30 to noon. The other all day 7 to 4, 2 signals, not all, is 32.87 and minus 34.25. Okay, next question.
Any stats on taking trades and fractals at market open when the bars are exceptionally long? We don't have anything in there that classifies them as long bars. We could put in the start and end time at 9:30 for all and fractals and see what the performance is.
Never looked at that.
I think it'll, yeah. So there's 53 days when there's a trade at 9:30. And I'm not going to look at the daily average necessarily because there's 53 days and it's only one. Oh, but if you do 9:33, then you're going to include fractals at 9:31.
Yeah.
So it depends on Eugene what time frame you're looking for. We could go from 9:30 to 9:34 to if anything during that first 5-minute bar. But what I would focus on is the win-loss ratio, which is at 78.7%. Well, what's 74? So it's about 3.7 points on that on average. But you're going to have losing trades in there and winning trades. So that's why it's averaging to that.
Okay.
Harris is asking if we join the trading room, can we use your charts and not have our own?
Absolutely. That's an advantage of being in the live trading room, but you don't get to trade when you want to. Trade when we are available, which is 8:45 to about 3:30. But it's a great way to start. You can make some money and subscribe to your own adaptive entry system subscription.
Michael's asking if you can go back to the trading plan.
Mm-hmm.
Michael, I think you're looking at the November. I'm assuming that's a 6-month forecast, that date that you have up there for November 30th in the top left.
It's just, so these numbers right here help you understand that from the point in time that you started, which I think we were July 6th, that you can put in any date in here and it will tell you what your balance should be based on that date. So you can see it's highlighted down here. It's a really cool feature that Aaron built in here. So I can put that in. It wasn't intended to be any particular 3 months, 6 months. It was just kind of an arbitrary date. If we started July 6th, then I just said through 12/30.
Oh no,
12,
20. Yeah, sorry.
You're very anxious to get out of 2020.
I am. I think a lot of people are.
This is just giving us an opportunity to see. I don't have to wait for 12 months to see what my income could be. I could actually, based on my current run rates, forecast what my account balance could possibly be at the end of December. So that'd be, July through December. That'd be 6 months or any point in between. And it was designed that way because if you are a full-time trader or you really want to pull money out to live on or use for other reasons, not just constantly grow the balance of your account, you can forecast, and you can actually put together a whole plan for yourself, for your personal trading business. If I knew that 3 months in I was going to have X number of dollars of profit, that's the plan. I can come over here to column Q and I can plug in a withdrawal at that point in time, and it will adjust the balance of the account going forward.
And so the 12-month forecast is in cell B5 with the 12-month forecast label underneath it. So it's the 296 number. Kevin's asking, what type of trades are you making? We're taking futures trades. All of this tracking is based on the NQ, the NASDAQ 100 futures. So we are not trading the options contracts on futures. We are just trading the futures contracts. So we have our futures trading platform, which is called the DOME, depth of market. And there's a buy market and a sell market. It's a lot easier than options trading. You don't have to choose a specific expiration or a specific delta. You just click buy market when you want to go long, sell market when you want to go short, and then you're able to specify bracket orders or trailing stop orders in order to lock in your profit. And I can send you a link. There's on New Cycle Trading's education page, there is an example of the Infinity DOME. Infinity is the broker that we trade with, and their DOME is their trading platform. So it's at the bottom of the page I'm about to send you. It's newcycletrading.com/education, and you can see that trading platform in action.
Mark, Paul's asking what are the numbers for trading all signals on all fractals 9 to 3?
All signals, including fractals, 9 to 3. For 112 trading days, averages about $890, just under $893 a day. 23 losing days during those 112 trading days, and 74.6% win-loss ratio.
Mark, do you have that image I sent you earlier?
I do.
Readily available. John is saying that he missed the explanation. I had taken a screenshot of my personal computer that I trade off of with my Infinity DOME and my chart side by side. It's actually different than how I used to trade. It used to be a little bit of a reverse where the DOME was on the right-hand side. But because we're so focused on the open of the bar and locking in the profit based on the open of the bar, I flipped where my DOME is. So you can see the DOME's on the left-hand side and my chart's on the right-hand side. It actually covers a little bit of my chart, but it's fine. I don't need to see that part. I'm covering the N of the NQ and the O for the open. But you can see that 1997.75 number right next to my DOME. That's the open of the bar. So that 1997.75 is right there. So I'm easily able to see what the open of the DOME or what the open of the bar is when I have an entry, and quickly figure out where my 5-point profit lock-in is going to be. And you can also see my alert log is taking up almost as much of my screen as my charts, because I really only need to see a few bars at a time. And then this is able to allow me to see the signals very clearly when they come on. And then just as a personal preference, we always recommend, Michael, I know, always recommends having your open orders window open to know if you have open orders out there. So the top one that Mark's pointing at is actually my trade log, so I can see when I've entered positions. I can always click on it to bring it to the front and look at it. And then right below that is the open order window. And so there you can see one's white, one's blue. It's actually red and blue, but it appears kind of whitish on the screen. And I know that's my upper and my lower fractal. If I am not in any trade As you can see on the dome, I'm in zero. I'm not in anything, and I have more than 2 open orders out there, or I know that there's not 2 fractals out there. I know I have an open order I need to go and cancel. So it allows me to be hands-on with my trading and very aware of my current open orders that I'm in as well. And this just takes up just my whole screen, and it just makes it very easy for me to trade. It's my only focus.
It's a great setup right there, Aaron, keeping you very focused on the limited number of data points that you really need to focus on.
Right. And I like that I don't have to scan all over to look at everything. And you can see how big my bars are. They're very spread out here. I can't miss a highlight, folks. I mean, I go through every day in the live trading room to help you evaluate what can happen at the next bar. And so if I know that there's a possibility I can have a long consensus, as soon as I see that green highlight, which I cannot miss on the way that my chart is, I'm long. And then I immediately look at that open of the bar and I'm able to get my cursor in there and get ready to lock in profit.
All right, Kevin's asking, how long are you in the average trade?
So Kevin, we don't track the length of time that we hold each trade. It's not very long. We're trading on a 5-minute chart. And if you just take a look at, let's look at the summary, for example. If you take a look at the summary, between 9:30 and noon, you can see how many trades we have. We only have 1 trade open at a time. These numbers here do not include fractals. So we only have 1 trade open at a time. So, like today, we did 13 trades between 9:30 and noon. We never hold trades overnight. If we're in a trade for more than a few minutes, it starts to feel like a lifetime. The signals act very precisely for us to be able to get in and out of a trade as long as the market is moving. So we can't tell you exactly what the average trade time is, but we can tell you how many trades occur basically within a certain period of time. So that 9:30 to noon, we average just under 10 trades per day. The 7 to 4, we average 13 to 14 trades a day.
I do have to say most of the trades, the majority of the trades were usually out within 10 minutes. However, there are days where we've held trades longer. I would even borderline on saying if we're just talking majority of the time we're out on the same bar. But I think maybe the longest trade I've held is maybe 40 minutes. Either way, I mean, there's plenty of signals throughout the day. You're not holding a signal for hours at a time. You're generally in and out pretty quickly. Those are the trades that I prefer is to be out within 5 seconds. Those are my preferences.
Erin was running the live trading room the other day. I felt like I had to jump in and talk her off the ledge because she'd been in a trade for like 20 minutes, 30 minutes.
That's exhausting.
So they don't last long. They don't last long at all.
They don't, not at all.
Kevin's asking, what is your exposure per trade?
So there's 2 ways to look at that when you're trading futures, Kevin. One is what's the margin requirement by your broker. Now we traded Infinity Futures, and in order for us to trade a single contract to the NASDAQ 100, it's $500 a margin. It's very, very reasonable. There are a lot of other brokers that are charging way more than that. We've heard of brokers that are charging 30 times that. There's one broker that someone was sharing with us that's charging $17,000 margin per contract. That just makes it very, very challenging to scale. So anyway, so the first level of exposure is you just need to have $500 in your account. But with trading futures, unlike options, your exposure is not limited to just the margin. You could lose a lot more than that. So when we are trading, we are using a fixed protective stop of $400 per contract. So it's 20 points of risk and it's $20 a point. So when we put a trade on, we are looking for no more exposure than $400 per contract. And we're looking for, ideally, $200 per contract of profit, but we have a method that we've been using for the last few months because the market is really prime for it, where as soon as we have 100 points of profit, we lock that in, meaning we move our stop from 20 points of potential loss to locking in 5 points of possible profit. And if it keeps running to 10, great. If it takes us out at 5, we look for the next trade, next signal.
And it's not an either or. If you want to show today's individual tracking detail, if a lot of people get confused and think that all of the losses would be 20-point losses, and that's just not the case, because sometimes we have a signal that comes on and then the next signal reverses itself. So 11:25 we had, well, even back up at 8:15, but 11:25 we had a reversal, so we ended up taking a 6.5-point loss. And then at 11:35 there was a reversal, so it was a 6-point loss. So it's not, you either make 5, you make 10, or you lose 20. There's an in between there where you can make a couple points, or you can lose a few points based on the signal reversing and you entering in the opposite direction.
Mark, George is asking what a fractal is.
So George, were you here just a few minutes ago? We went through a fairly detailed explanation of fractals, and you're going to be able to get that off of the recording of this. I'd prefer not to go back and do the same explanation of fractals here, because we went through pretty thoroughly what a fractal is, how to view them, how to trade them, and that would be available to you on the recording. Fred's saying, I'm unclear how the personal trading plan is calculated. Is it possible to show how it is calculated for today? So the personal trading plan is just simply mathematical projection using these run rates. We have a run rate of our winning days and a run rate of our losing days, and we know the frequency of our losing days versus our winning days because we have 19.6 weeks behind us and we have 27 days that were losses, so we know that by default the balance of those days are winning days. So this is really just taking a mathematical projection of those particular run rates and forecasting it out for the balance of our 52-week plan. Yeah, Kevin, this session, this Q&A session is being recorded. So the recording will include the update of the personal trading plan for Monday, Tuesday, and Wednesday this week. The recording also includes the overview of fractals that we did. And it's also including the Erin's explanation about how she's positioning her dome relative to her charts for just optimizing her ability to quickly enter positions. And that recording, this recording, will be available tomorrow. Generally, Dorothy sends it out sometime late morning, and so that's where you should be able to get it.
And there will be an email. You'll be notified and how to access it and everything tomorrow.
Let's see, David's asking for the NQ, how far does the price need to go past the target to be considered clear of it?
You talking about Michael's price targets? Usually if it touches it, right, Michael, as soon as it hits that level?
Yes, yes.
So if it touches it, it's satisfied the target. It doesn't have to go past the target number.
In fact, 70% of the time it usually bounces off the target number.
Right. It's a nice little sell-off right there towards the end of the day. So one last thing I just wanted to share, folks. I don't have a question about this here tonight, but periodically I get questions about trading stocks. How do we use the adaptive entry system signals for trading stocks? I would invite you to do some of your own research on this. We don't have published research like we do with the PSSM or with our tracking for the NASDAQ 100 futures, but you can just take a step back once you have a full understanding of the adaptive entry system signals. And if all you did was you looked at, say, a 10-minute or a 30-minute chart, and you just looked at the trend bias signals, the trend continuation and trend bias signals, so that's the T and the T plus, you're going to find that there are a lot of opportunities. And if there's a particular stock you're interested in trading options on, or if there's a particular stock that perhaps you own and you're looking for a way to optimize your exit out of the stock and your re-entry into the stock, or when to add shares, or when to protect yourself, maybe use a covered call strategy on a stock that you own because it's apparent that the price, according to the adaptive entry system, may be moving lower. Those strategies can all be traded using the adaptive entry system. So just as an example, here's Tesla. I'm showing a 10-day, 30-day, sorry, 10-minute, 30-minute, and daily chart. If I was trading options on these stocks, I'd be looking at a 10-minute and or a 30-minute chart. So here's a 10-minute, for example. Here's a very simple trend bias entry. It's the second blue bar. It's the second blue bar. Came on at 9:40 this morning, and you could have been in that trade all day, exiting out sometime around 15:40, 3:40 this afternoon. You can see that was a really nice move to the upside. If you take a look at Shopify, so I'm just going to go through very quickly our watch list of stocks. You know, here's an entry to go long. You're out here. Here's an entry to go short. Didn't really give you much right there, but you're out there. Might have had a small loss on that. Here's another entry to go long, and either you closed it before the end of the day, or you might still be holding it overnight. That's just something you have to decide to do. Netflix, not something we track closely, but a lot of people in our trading community do. Here's an entry at 10:50 to go long. You're out of that. You missed a little bit of the peak, but we're never going to catch the highs and the lows. You're out of it here, not in anything here because it's neutral. Sideways movement here on a short move, and then possibly another move to go long. You can also take a look at 30-minute charts. I would invite you, before you do any trading, to do your own evaluations. You can, go back in your adaptive entry system signals built on TradingView and see what type of performance you would have, say, over a 30, 60, or 90-day period on whatever stocks that you want to trade. Booking is another one. Booking had some really nice movements today, right towards the end of the day. I mean, here, Booking, you would have been long on a trend bias trade at 9:50 this morning. Nice pop to the upside. You would have been out here. You would have been short here at 2:30 this afternoon, and you could have been out before market close with a nice move. So two moves, one up, one down. Those are nice options trades right there. And then Amazon. Amazon offers a lot of opportunity also, taking a look at the 10-minute and 30-minute trend bias entries. Now, if you notice, I don't have on my 30-minute chart consensus or momentum signals. I only have trend bias and trend continuation signals. That's what I would be looking at if I was trading options on these. Kevin, so the ones I just went through, let's just take a look at Tesla, for example. If I was trading options on Tesla and I was using a 10-minute or 30-minute chart to get into these trades, here, when I have a long trend bias signal, I would be buying to open a call, or using some other type of rising bias spread strategy. And on, what was it? What did we just look at? Booking. If I was taking this short Booking trade, because it's the second red bar, so it shows a trend that's moving lower, I would be buying to open a put or using some other type of short bias entry. If you own stock, you can use the same strategy. So let's say you're an owner of Amazon, and you can use these to decide when a trend has finished, and you could sell to open options against your stock and create a covered call situation and generate income off of your stock. But rather than do it randomly, which is what most traders do on covered calls, you can use a really strong set of signals called the adaptive entry system. We're not buying with delta in mind. We are, first of all, identifying the signal, Kevin, that tells us we want to be in the trade. We want to either be short or we want to be long. And then from there, you have to decide how much capital you want to commit to the trade. That's going to influence your delta. So when I'm looking at an options trade, the first thing I'm going to do is look for an at-the-money option. And if the cost of that is too much, too rich for me, and I want to give myself a couple weeks at least to expiration, but if it's too expensive for me, then I might move down to a 40 delta or a 30 delta, or I might shift to a debit spread so that I can still participate in the movement, but I need to manage my delta, manage my expiration, manage my strategy around something that's going to allow me to feel comfortable with the amount of capital I'm committing to that trade.
Okay, Mark, that's all the questions I see.
Okay, Michael. Michael, Aaron, thank you so much for being here, and everybody in our community, I appreciate you participating. Appreciate you giving us the opportunity to help you learn and help you achieve whatever goals you have personally. I think every trader, whether you're trading futures or options, must have the adaptive entry system. It's one of the best technical systems I've ever seen, and it's got a lot of consistency. The more data we build, the more consistency we see. 112 trading days so far that we've personally tracked in the live trading room. That's tool number one. Tool number two is the personal trading plan. If you don't have some way of knowing on a day-to-day basis where your performance is projecting you, you will end up telling yourself a lot of stories about what happened today, that didn't work. Oh my gosh, I'm not doing very well. You need to plug it into the personal trading plan and understand where that performance, whether it was very strong or very negative that day, where that projects you for a 12-month period. And then I personally believe, as a little selfish maybe, but I personally believe that being in our live trading room and taking advantage of the knowledge and expertise that Aaron has, that Michael has, and that I have in helping to guide you through understanding how to properly trade the market is invaluable. It is real-time education, is real-time support for any questions that you have. So I think that those are the three primary tools that I think you need. Last couple of questions here. Michael says, sounds like this would be great for swing trading. I think that you could experiment with it, Michael. Take a look at a stock that you are interested in trading. Go back and do some of your own research and then trade it in a paper account. But I think that it's ideal for some swing trading. And Kevin's saying his primary interest is in trading credit spreads, iron condors, etc. Yeah, so you can use the adaptive entry system to understand when to put on a put credit spread, when to put on a call credit spread. Because if I have a signal that's telling me to go short, I'd put on a call credit spread. If I have a signal that's telling me to go long, I'll put on a put credit spread. So the signals themselves are still telling you when it's appropriate to go long, when it's appropriate to go short, and it's up to you to decide what strategy you want to use to take advantage of that opportunity. And you could certainly go short on a, you could certainly open a put credit spread when you see a signal go long. You could continue to hold that put credit spread if you choose to when you see a signal to go short by opening a call credit spread. I think the better way to trade these signals is you're in and out You're in when the signal tells you to go long, and you're out when the signal tells you to go short, and then you're back in short, and vice versa. And the last comment goes to Christian. We appreciate your support, Christian. Christian says, I need a bumper sticker that says, I love AES, the Adaptive Entry System. Well, we appreciate your support, Christian. Appreciate you being part of our room. All right, we're going to go ahead and close out the room. Recording will come out tomorrow. Email will be sent out telling you how to take advantage of accessing the recording. Michael and Aaron, thank you for being here. Everybody, hope you have a great evening.